Hi guys, my name is Michael. Welcome back. Sorry, I don't have a camera today. I'm having some technical difficulties, but I promise I'll be back again. But I really want to share this information with you guys, and I hope this article, communicates, some of the things that I've been trying to explain to you guys regarding gold and why we should put our focus on gold right now. So if you take a look at this article, it asks a question which everyone is asking. Gold's record run can't continue forever, right? Which is basically saying that, can the rally in gold continue? And this is what everyone is saying. Everyone, I'm talking to, they're talking about, like, gold has already been rallying for a while. Can that thing continue? And you guys know my answer to that. I've said it, that I strongly believe that the rally in gold is just starting. Gold has a long way to go. And so if you're thinking about, or, if you're thinking about considering, an investment like gold, you are not too late to the train. Obviously, this is not financial advice in any way or form. So let me share a couple of information with you guys from this article. So if you take a look at this first statement here, it says gold is what you buy when things isn't Goldilocks. So, situations like inflation, deflation, war, pestilence, that is when we see people buy gold, right? When the economic climate is, not normal, that is when people rush to gold, because gold is considered a safe haven asset. It says here that gold is a certain anxious state of mind made tangible in a seductive way, seductive but mostly useless metal. In a word spin, gold has been enjoying a Goldilocks period itself, hitting a new record last week. So what they're trying to say is that basically, gold is something people buy when they are anxious. And I talked about this, in my previous video, that people run to gold only when they are no longer confident in the economic in the global financial system, or in the economic or geopolitical climate. So gold is not something you would buy on a normal day, right? It's something you buy when the economic climate, is not conducive for investment or something. So we're talking about periods like high inflation. We're talking about deflationary periods. We're talking about periods like war, like for instance, what is happening in Ukraine or in the Middle East, or pestilence. So gold is something you reach out. It's an emergency. Is a safe haven metal. So when you see people reaching out for gold, there is something wrong. Do you get? There is something wrong. It's like being in an airplane, right? No one will on a normal flight reach for their parachute, right? But if you're in an airplane and you start seeing everyone putting on their parachute, then you know something is wrong. To that, something is going wrong in that airline, and that is what gold looks like. So when you see people buying gold, regardless of what, whether you know what is going on or you don't, just understand that there's something wrong somewhere. So the next paragraph talks about the fact that gold's investment case tends to morph over time, but it is often framed in relative terms: gold versus stocks, gold versus dollar, gold versus Bitcoin, whatever. So what they're trying to say is that every time you see, when they're talking about gold, you have to talk about it in a relative term. So you're talking about what's the price of gold versus the price of stock, things like that. So in this one, they're talking about treasury yields, and this is one thing that I want you guys to pick from this video. It says, the one that makes intuitive sense is gold's relationship with real treasury yields. When the latter are positive or rising, gold, which yields nothing, should suffer, or vice versa. This relationship broke in 2022. And this is what I've been trying to tell you guys, that gold doesn't care anymore. All those historical correlations that we used to pin gold with, all those things are breaking. So before, what you would see is that when treasury yields are positive or rising, the price of gold will suffer, because gold does not have an interest on it. So a lot of investors will prefer to put their money in treasury bills rather than putting it in gold, because at least if you put it in treasury yields, like right now where you've got over 4%, right, you're going to be yielding something, as opposed to putting it in gold that yields nothing. But the problem is that right now we have positive treasury yields. Right now yields are up, but gold is up. So gold is not suffering from the fact that yields are up and yields are positive, which is abnormal. Do you get? So that correlation broke in 2022. So that's what I'm trying to bring, your attention to, that something is happening with gold, and that is why we need to pay attention to it. Another interesting paragraph from this article says, a multifactor model of gold prices maintained by Longview Economics, a London-based analysis firm, diverged sharply from the market price of gold in 2022. So it feels like something happened in 2022, because gold broke out of its usual correlation. It broke out of its pattern, the channel that has been running it. Something happened in 2022, and the effect of that thing is what we are seeing today in 2024. It says, and by early 24, the model indicated a price below 1,000 pounds, $1,000 per ounce, whereas gold was then trading at more than $2,000. So what they're saying is that there's this analyst firm in London, right, that was tracking the price of gold, and they do models, to predict the price of gold. And their model was predicting that the price of gold in early 2024 would be $1,000. But right now, gold is trading at 2 times their prediction. So it means that they used historical patterns, historical correlations to base their model. They base their model on historical patterns, historical correlations, which is that treasury yields will rise, gold will fall. When yields are positive, gold will fall. But all those things are no longer working. So the models are broken because gold has broken out of those historical correlations. So the model is saying that by 2024, the price of gold should be $1,000, but what we're seeing in reality is that gold is $2,000. So that model is broken. They would have to put in new data points to fix that model. So it says here, similarly, physically backed gold exchange ETFs, right, began liquidating their stockpile in earnest in mid-2022, likely taking their cue from the Federal Reserve's policy tightening. But that barely weighed on prices, and then gold actually rallied even as ETF liquidation continued. I don't know if you guys are understanding what is going on. So the ETFs, right, they were predicting, that the Federal Reserve was going to tighten the they were going to switch to a tightening policy, right? Which is that they're going to increase interest rates and obviously reduce the money supply, which means that things are going to be tight from a monetary policy point of view. And so they were predicting that. So all of them started liquidating their gold stockpiles. They were selling down their gold because they felt that the price of gold was going to crash. So they wanted to quickly get rid of the gold as quickly as possible before the price crashed. But the opposite occurred. So even though the ETFs were selling their gold stockpile, we should put pressure on the price of gold downwards. Gold rallied. So do you get what I'm saying? So when ETFs are selling their stockpiles of gold, that should put a downward price pressure on gold. But instead, gold was rallying. So the Federal Reserve ended up tightening their policy. The ETFs were selling their gold stockpiles, yet gold was still rallying. So it means that there's something somewhere that we are not paying attention to. Because where is this rally coming from, right? A lot of people might, say is the central banks, is this, is that. But there's something about gold that we are not paying attention to. And I'm telling you that the data points for gold are manipulated heavily. So we're not seeing everything that we ought to be seeing when it comes to gold. I'm going to go to the next paragraph here. So if you take a look at this, it says gold was saved by central banks. So basically, that's what they're saying. It's the central bank that saved gold, right? Gold was saved by central banks stepping into the breach. So the gap left by the ETFs, the central banks came in and bought all those dip. So the central bank was buying the dip, basically. It says Russia's new invasion of Ukraine in 2022 sparked sanctions by the US and its allies, prompting a wave of gold stockpiling by central banks as a geopolitical hedge in order to diversify their reserves away from the dollar. Well, a lot of people might say, yes, this is what helped the price of gold, rally. Central banks are buying a lot of gold. Also, hostile nations, were also buying gold, trying to diversify away from the dollar. So that might be what has helped gold to maintain the price or even rally. But I'm telling you, we are not seeing the whole picture when it comes to gold. Also, they're talking about the fact that Chinese buyers as well, real estate in China is in the mud. So a lot of people are diversifying away from real estate, and they are using gold to replace their previous real estate investment. So a lot of people are packing money in gold. That is fine, but I don't think that that's the whole picture when it comes to gold. Also, I want to just share this last bit with you. It says the Fed's pivot to easing and rumblings about a potential US recession being in the offing has added further fuel of late, with geopolitics having allowed gold to sketch the tightening circle. It looks set to benefit further from its traditional ally, falling real yields. So this is something that we need to understand. When people are talking about the fact that, I think gold has already run its course, it has gone up, a lot too fast. You need to understand that the economic climate and the indicators are tailwinds. The current economic climate, we still have a lot of tailwinds for gold. Because think about it, right? When real yields are positive and when yields are going up, gold should be falling, right? And when yields are falling or when yields are negative, gold goes up. But what we saw, is that yields were rising and yields were positive, yet gold was rising, right? And now we are in a place, we're in an economical situation where yields are about to fall and yields may likely go negative. So think about what will happen to gold in that situation. If the economic climate necessary for the price of gold to fall did not affect the price of gold, then think about what will happen when the economical climates that are favorable to a rising gold price comes into view. So what we are seeing is that as the Federal Reserve begins its interest rate cutting cycle, that this is going to be a tailwind for gold, because what we're going to see is inflation is going to pick back up eventually. So gold will continue to rise, and that is why I'm telling a lot of people that it is not too late to get into gold. It is not too late to get into gold. All right. So the last thing I want to share with you guys from this article is that the risks on which gold thrives are still there to some degree, but gold's rally appears to have priced them in already and then some. Chris Watling, Longview's founder and chief executive, observes Drilly with regards to a gold market that looks overcooked. Everyone owns it and everyone wants to know what you think of it. When there is that much optimism around gold itself, maybe it's time to worry. And this is the thing we're talking about. When everyone is talking about gold, then it is time to worry. It means that something something is wrong somewhere. And that is what he's trying to say. When there's so much optimism, because usually, gold is not something a lot of people talk about. I mean, on a normal day, there's no advisor that will even advise you to buy gold. When you go to meet, those Goldman Sachs, you meet all those financial advisors, they will talk about treasury yields, they'll talk about bonds. But when you see gold start coming to the mainstream, when it comes to the investment climate, it means that there's something wrong somewhere and it is time to worry. And that is what I've been trying to, tell a lot of people, that the barometer which gold acts as is pointing to a sign of worry when it comes to the economic climate, and the global financial system. So we all need to be paying attention to these things. We all need to understand that, if you're an investor out there and you're looking to get into gold, it is not too late. You guys all know my prediction. I am saying that in the next 12 months, I see the price of gold at $5,000. That is almost double from where it is today. So there is still a lot of room for gold to run. There is still a lot of firepower. There's still a lot of fuel in this rocket. And I believe that gold is going to the moon at some point. No matter what happens at this point, gold is going up. And I believe that the events that are on the horizon will push gold to new all-time highs and will push the price of gold to another level. So guys, I just thought I'd bring this to your attention. If you like information and if you like content like this, please don't remember to like, subscribe, and hit the notification bell. I'll see you guys in the next one. Bye for now.